This week's Cup of Coffee is presented by Canadian Ag Markets. We are a YouTube channel for Canadian Western farmers. We focus only on Western Canadian farmers. So if you're interested in seeing videos or even listening to podcasts, check out Canadian Ag Markets on YouTube. But here's the futures rundown. As of right now, these are live prices. We have canola, $10.90 up to $737.80. Minneapolis wheat is up 1/4 cent to $6.72. Kansas wheat is down 3 3/4 at $6.43 3/4. Chicago wheat is down 3 1/4 to $6.02 3/4. We do have soybean oil up 1.3 cents to about 70.6. I think that's important when we talk about the canola markets. Canadian dollar is up very marginally, 73.30. Crude oil is down marginally as well at 86.80. So I'm going to bring Ryan on now so that we can get right to it. Are you there, Ryan? How you doing?
I'm here, Brian. Can you hear me?
I can. You're in Ontario today for a Securities Commission meeting. Is that right?
Yeah. I'm at a conference, OSC Dialogue, so Ontario Securities Commissions. Actually, James Patterson, I believe, is the gentleman's last name. He just got off stage, and he is Ontario's basically trade negotiator. He hangs out in Washington. And he's quite optimistic on a pretty strong trade deal between the U.S. and Canada moving forward. So he said we have to kind of catch up to Mexico in negotiations, but Mexico has a lot more to cover than we do. So pretty interesting and on point speaker here to kick off our morning in Toronto.
Right on. All right, well, time's a ticking. Let's get into some of the questions or some of the topics that we had there. Wheat conditions dropped significantly. They've been dropping significantly through the last few weeks here. The market is not reacting today necessarily in the Kansas, Chicago, not even in Minneapolis, really. What's your take on that?
Well, I find that a little strange because the trade missed on the good to excellent number yesterday. Like, I think they missed it by a couple of percent. I think they came in at 32%. So I'm actually surprised to see the market trade lower. That being said, though, Brian, I did not look at the forecast to see if rains were developing here for that western wheat belt. So I don't know if you had a chance to look at the weather forecast this morning. Is that what's going on here? Is that why we're seeing a bit of a quiet start to wheat trade today?
I think it could be a couple of different things. Yeah, there is some moisture coming into those areas, but into Saturday, Sunday, but it is currently less than or around, an inch of rain in some of those areas. That's some. I don't think it's enough to turn around, the damage. I think the temperatures have been milder. So, the drying has been not as aggressive as it could have been.
It froze as well over the weekend, right?
Yeah,
wasn't
exactly.
it -5 or -6 or something like that?
Yeah, I think like 28 below Fahrenheit. Yeah, it definitely did catch a frost. And I don't know if the damage has been assessed there, but the market definitely doesn't seem to be trading it unless they did over, into Friday when the temperatures were forecast to be low.
Last night, I did take a peek because I think the reference years for this type of good to excellent rating are 2022, I think stands out. And was it 2023 that was the other comparable? So not too far in our history here. Pretty decent moves higher though, at least in 2022. Like Kansas City wheat really, I think it gained was it $1.50 or something like that in futures? I didn't look at the exact numbers, but it was significant. 2023 though, it did have its moments, short spurts of up, but that trend remained down. So I've been cautiously optimistic here in wheat. I've seen some values in the prairies hit some new highs here. Some guys with some targets getting hit at some new highs for old crop. Didn't see anything for new crop hard red spring wheat for a new high. I don't know if you did today, but I was trying to see if there was anything. But I'm still cautiously optimistic, Brian. Am I out to lunch?
No, I'm cautiously optimistic as well. Analysts and traders do behave differently. And so maybe the traders had a different, we're pricing it in ahead of time. And then when the analyst assessment came out, it wasn't as big a surprise as what the numbers would have suggested. All right, let's talk about, this morning there was, the the ceasefire and the global situation is very dynamic. This morning, Trump came out and said that Iran, if they didn't come to a ceasefire, that he was literally going to take action and strike Iran. They have been seizing boats in the Strait of Hormuz. That whole situation also seems to have calmed in the grain markets. Do you think that volatility is over as well?
At least with this current storyline, or like we need something new. And I hate to say it like this, but like we kind of get, I hate saying bored, but we kind of get bored. And unfortunately, something new has to happen. Something new and exciting has to kind of come out and spark this. But we've seen this disconnect. I think you were talking about this disconnect a couple of weeks ago, even now, or was it last week? Like, yeah. So we need something kind of new. You'd think the U.S. seizing vessels would be new information enough to move this thing higher. Did you say, was canola up $10? Is that what you said earlier, or not quite that high?
It is up 11.20 now, and that's about 1.5%. Largely driven, I think, by soybean oil, which is up over 2% today. But crude oil is not the driver there either. It's down.
Yeah, crude oil was lower, I think, when I checked this morning, or slightly lower. But interesting.
Yeah,
interesting.
I think there isn't really, like, grain does not really move through the strait, right? So there's still a lot of political risk on the oil and energy side, but definitely the knee-jerk reaction in the markets is lower in grain.
Do you, just isolating to that canola market for a second, I've been looking and recommending to kind of target, that upper end of that sideways range that we've been in. Do you think that's something that growers could take a peek at this week yet? Or are you aiming higher than that on your side, Brian? I was thinking that higher end of the latest trading range here over the last month.
Yeah, I mean, if, particularly with new crop, I think there is an opportunity to start layering off sales there. If you haven't done anything at all, we've been kind of talking about doing that, or even using some, floor pricing strategies to get that done as well. Because obviously there's a lot that can happen. The crop isn't even planted yet. So it's not even in the growing season yet. Soybeans, there's been a disconnect between canola and soybeans as well, but that whole U.S. growing season, other than wheat, hasn't happened yet. So I think there's lots of opportunity, but you also, we did get a shot in the arm because of the conflict in Iran. So the seasonal patterns may actually be earlier this year than normal.
Yeah, that came up the other day about seasonal patterns, maybe being early. And we'll see it again in Alberta. I don't know what it's like in Winnipeg or Manitoba right now, but man, like the seventh winter kind of continues this week, and we are escaping it here for a few days, but it's very cold in Toronto as well. We did not find warmer weather, but some snowpack, especially north of Edmonton yet.
Yep.
It's warm today, but anyways, a little bit, we need to string together some heat here to get guys going in the field sooner than later.
Yeah, exactly. In Winnipeg here, it's pothole season, we call it. There's definitely holes in the ground all over the place. I want to talk about fertilizer too. There was a story that dropped over the weekend that said that the U.S. was actually re-exporting fertilizer out of the Gulf as prices overseas are advantageous enough to move fertilizer from the U.S. into overseas markets, which is kind of taking away from the U.S. and North American markets. What are you seeing? I'm not really in tap as much with fertilizer prices. I know you definitely have a better handle on that. What are you seeing out there as far as fertilizer bids right now?
Well, unfortunately, like for a product like urea, like we're seeing more like no bids or nothing available price-wise to offer, at this time. Like more than anything, as people sort through their spring logistics, I think you have to make a few extra phone calls to find a price. And the latest, stuff I saw was that urea and phos were basically trading at the same level across the prairies, which is quite rare. But yeah, like markets, that's what they do, right? The markets, that's how they work. You go and find your your best margin. And Trump and Secretary of Ag Brooke Rollins, I don't know if that's her proper title, but they've been talking about corruption in fertilizer. Well, don't worry about the corruption side now. Like, sure, keep that on the agenda at some point, but go and maybe slow that down and make sure your fertilizer stays local, so that you can use it here in the spring or fall. So that's interesting, man. I hope, cross our fingers, that we're not seeing similar stuff out of Canada, but that's how markets work, right? You're accountable to your shareholders.
Yeah, exactly. So, all right, let's get into some of the questions here. We did get a couple of questions before the session here. This gentleman was asking that, brokerage accounts are becoming more available to farms. Do you think that some operations for some operations, it would be advantageous to forward contract? And I don't know if he said large quantities, and I don't know if that's an important distinction here, but at least some quantities of grain to sell off the combine, then re-own them on paper.
First thing I'd say is that the accounts have always been there, right? The ability to open an account and hedge and trades, it's been there forever. But I think just more awareness, more education around it, and just folks considering it, maybe the next generation kind of considering it. I got an email the other day saying we had a farm meeting, and the older generation totally squashed the trading account idea, and the younger generation was for it. So anyways, it's always interesting. I think from a strategy perspective, I think about a brokerage account as using it to reduce or completely eliminate your risk of a buyout through a grain elevator or a line company. So, I like hedging on paper. That's what I would aim for before the physical sale. And then once my bushels are known or I feel good, then I would flip that over and start selling physical bushels. But it can be used, both ways. I don't, one way might feel better or sound better to a grower than another way. But the cool thing is that once you open up that toolbox, you can tackle it all sorts of ways as you get going. I don't know, Brian, what do you think about that?
Well, I think the question was phrased interestingly. Large quantities was one of the words, and the other was, fall delivery. And I think there's a couple of different nuances there. Reowning or hedging on paper, or reowning on paper after delivery or even before delivery, to lead the new crop market is a good idea. But the question, I think, is, do you need to sell off the combine? If you do, for cash flow, for bin space, downside is that you're probably not going to get the best basis as you move through or into the early parts of the new crop season. So if holding grain into the spring or into the early summer does tend to yield better basis levels overall. We are seeing that this year, even though the base levels in canola have been kind of terrible all year. Wheat basis levels have been good, but it does give you some more opportunity to kind of play the basis side. And, also, like, let's say in wheat markets, for example, there is opportunity to capture carry out further out in the calendar. So as far as the new crop side or the delivery close to harvest, there are obvious advantages, particularly with cash flow, but there are advantages to holding off as well because of, better basis and things like that. On the other side, the large quantities, that's a good question, because the thing with brokerage accounts, and I'm just talking about long and short futures here, is that they also require a margin aspect to it. And that can tie up a lot of margin and a lot of cash. And, if you're on the, I guess, wrong side isn't the right way to put it, because obviously it's a hedge and not a speculative position. That can tie up quite a bit of cash if that's not what you're interested in. And actually, going back to the speculative side, we have noticed sometimes that farmers will flip a hedge into a spec position, and that can turn dangerous as well if that's a strategy that is, if that's the way a farmer will play it, that can get a little bit dangerous.
Yeah, good comments on the basis as well, and the gains as you hold.
This is from Brad. What do you think? What crop will be the sleeper this year? The one that farmers wish that they would have grown more of in 2026?
I was going to go with wheat. It's maybe not the popular answer out there, but everyone wants to grow less wheat, and this is the most excited I've been about wheat markets since apparently 2022.
Yeah.
The spring of 2022.
I tend to agree with you, although I do think that canola, the S&D in canola will correct itself in 1 year, and I think there may be opportunities with the increase in crush capacity.
Nice. So I got a question from Ryan, and it was in regards to volatility. I'm going to paraphrase, but basically looking at, he said when volatility is high and you go and buy a put option, the puts are very expensive. But if you're doing some type of three-way spread, buying a put, selling a put, maybe selling a call, something like that, he's asking if volatility matters or if it influences a higher cost, or if that it kind of washes out because you are playing multiple sides in that example.
Well, my take is that as a general statement, when volatility moves higher, it kind of moves both in tandem with each other. So, in theory, it shouldn't be necessarily affecting the spread. I'll caveat though by saying if the market is trending significantly in one direction, you can get a skew between the two. And, a recent example obviously would have been the big shock about the Iran war at the end of February and the beginning of March. We saw, calls priced more aggressively for the seller in that particular case. Now I think it's kind of skewing almost to the put because there is more risk of downside now that a lot of that stuff has come out. So there are small nuances, but as a general statement, higher volatility raises, higher tides raise all boats kind of situation. What do you think?
Yeah, I mean, in simple terms for myself, if I'm buying something expensive, if I can sell something that's also quote unquote expensive, I like kind of doing that at the same time. But it's not something that I am well versed in or pay a lot of attention to. I just notice when things are feel cheap or look cheaper when they feel expensive. And when they're expensive, if I'm buying something, I also like to sell something. So yeah.
Cheap and expensive are both relative. My alarm went off. We have reached the 20 minutes. We'll see you again next week. I think I'm hosting again next week. Is that right?
If you can, yeah. I'll be tuning in from a slightly warmer destination, hopefully.
Nice. All right. Have a great day, everybody.